The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. Of course, today we're going to make it whole, but Tom is on vacation, and so right now you got the Dow up 75 points. Looks like some short covering going on here. You got the S&P up 10, Composite up 22, Russell 2000 up 7 points, New York Stock Exchange up 0.6%, up 51 points. NDX lead the charge really on the way up almost 0.9%, up 21 points. Around the world, you got the DAX trading up a full percentage point right now, up 62 points. The FTSE up 68 points. That's up 1.25%. The Nikkei closed out last night up almost 0.8%, up $66 and change. The Hang Seng was up a nice 1% last night, 195 points. The Shanghai down 5 points. King Dollar. So you got the markets up 75 points. You got the King up as well. King Dollar up 22 ticks. Gold pretty much flat, trading out at $15.73. Silver out at $27. That's down 3 pennies right now. Light sweet crude taking off up $1.15 out at $80.50. And folks, we're gonna try to give my vocal cords a little bit of a rest here, and we're gonna share the hour with Basil Chapman. Now, Basil does a show following this one, so his vocal cords are gonna get stretched. I know he was doing the show last night from 5 to 6. So, Basil, thanks so much for joining me. I really appreciate that today.
Hi, Steve. How are you?
I am absolutely doing great. Absolutely doing great. And, you've made some really, really wonderful calls, as usual. And I don't know where you want to start, but, I think you picked some of the auto parts stores up at the highs. Maybe you could share with people how you did that, how you used your technique. Is that a place where you could start?
Oh, that's very good. And actually, one of the reasons why I spent a little time on this quite a few weeks ago, in fact, I've usually got it written down, so I'd know exactly when. The chart that you're looking at right now, I'm not sure that we're able to get all these charts showing.
I think if you post it, Al's going to be able to get your chart in the den, and I'm just going to try to figure out how to find it myself. But you go ahead. You go ahead and post it, because I can follow along at least on my chart here.
What I've been looking at was Advanced Auto Parts, AAP.
Okay. And
in my work, what I look at is if I'm starting to get signals that tell me, usually it's via the weekly chart, that there's a chance that the top that's about to be made is going to be fairly serious. I look at my monthly chart, and if that is in the Chapman wave, a very simple concept of finding the lowest low bar and merely counting each successively higher peak, and I label the peaks peak A. Next peak is B, then C, and D, and it can go higher. But D is where you want to be very careful.
Yeah, and now in the case of Advanced Auto Parts, you would be starting down from the November 2008 time frame on the monthly chart?
Exactly. Yes, and what we've got here is from the low, and I use a whole bunch of techniques that I've developed over the years. And one of the things I look at, which only comes into focus when it is important, and that is the 200-period exponential moving average.
Yes.
You will see, I've expanded this chart. If anyone's not used to looking at my charts, there's always 3 up. The left one is the daily, the middle one is the weekly, the right one is the monthly. I've stretched this monthly out a little bit so you can see it. From the starting point in October of 2008 at 2411, you can count. You can see that there was a peak made at 47.41 in July of 2009.
Yes.
Another peak in that's A, and then peak B was in November at 68.88, November of 2010, pulls back, goes to 72.32, May of 2011, pulls back, and it has a final climb that goes to this peak at 93.08.
Yes.
April of this year.
Yes.
And then it makes a fractionally lower high. This is a technique that I've developed over a number of years, but I've made a big deal over the past couple of months. And I've spoken about when...
And the fractionally lower high coming when?
Fractionally
April?
lower high in the monthly charts.
Yeah.
Two parallel highs, and the one is fractionally lower. Actually, now I've been working for about 6 or 8 months on the concept of what happens if it's fractionally higher. As the two work together.
Yeah.
The best one is if it's fractionally lower.
Got
but
it.
Advanced Order Parts did that, and I spoke about that and I said I think it's going to be turning down. The stock that we in my opening call have is AZO, which is AutoZone.
Right.
Now, it's made a leg E up, and it hasn't yet broken the 9-period exponential moving average, and it's been one of the very strongest stocks since the 2009 low at 84.66. It went to 399.10, and it had three 99.10 highs. And then it had a 399.03. It's so fractionally lower that it's very easy not to see it. So it's a technique that I developed. And what happened is that the weekly chart of AAP was peak F, and the weekly chart is a little messy, and I'll open this up, of AZO, because I like my subscribers to know exactly what we're looking at.
Yes.
So I keep the notation, the written part on. But you will see that the MACD and the stochastic are pulling back sharply. So that says to me that the tops that are being made in the auto sector, and Orly is another one, but we happen to have my opening call, we short from 387.50, 385, the last one, in Asia. That is telling me that this is a very important sector, but it's a rotational market. I thought the auto sector, when it pulled back, would in fact turn out to be the top, a major top, and everything else would turn down. But this rotational correction that I keep talking about suddenly sees the home builders re-energize.
Yes.
And that's the fascinating thing about this market. You've got to be... I've been avoiding being short or long the indexes because they've been so whippy, and I've tried to pick stocks that I think are like the restaurant sector and the auto sector that I think are highly vulnerable. And in fact, we've seen the restaurant sector tanking as well today. We happen to have CMG, Chipotle.
Right.
I think I spoke to you about this last week when you interviewed me. I can't remember. Oh, it was Joseph A. Banks, right?
Yeah. I think so. That's right.
So the short side, if you've got stocks, and you've been speaking about this as well, that if you're looking at certain stocks, there are some stocks that look as if they're holding and they're breaking out to the upside. Not that many, but there are some. But there are a number of stocks that are looking much weaker.
Absolutely. So now back on AutoZone, just on AutoZone. So if you take a look at, so absolutely the auto parts store is getting, smoked today. And they got O'Reilly Automotive folks down 18%. That's off $17. AutoZone right behind it, now down $14. It's off of its session lows, still down 4%. You've got Advanced Auto Parts off about 4% today. Now, what's your take on how AutoZone is behaving this morning?
Well, it did the same thing yesterday. Now, I've done this. What I do for my subscribers is that each day it takes a lot of time, because normally by the end of the day, at 4 o'clock, I've pretty much made up my mind exactly what the parameters are. To take me a split second just to say it, but I like to write this down so that I know you do a tremendous amount of work every single day as well. Because you want your subscribers to know. You treat them as clients. You want them to know exactly what you're thinking.
Absolutely.
You want them to know, follow the methodology.
Absolutely.
So the methodology that I use is when I'm using MACD. The MACD is the moving average convergence divergence, a set of moving averages, and the slow stochastic. And certain patterns that I talk about, the arch formation, the cup formation, those are very important. They could be a V or an inverted V, but it's the same concept. And if you look at the 120-minute chart that I'm showing, and I've been notating this every day, I showed that there was a consolidation, a high-level consolidation, which has turned into an arch formation as the price plunged below 369.56. And what I was saying today is that if the candle of yesterday, I didn't even know, because when I sent out my work this morning, I was still showing 375 as the close yesterday.
I understand.
So if the technique that I use is if the wick of this candle, which looks a little bit like a Roman candle of yesterday in the daily chart, if the wick is taken out by one half of the length of that wick,
it certainly did more than that, huh?
That is a negative. Well, you can see. And where did it stop? It's so fascinating. Right on the 200-period moving average of 3. In fact, yesterday during Tom's show, one of the dentists asked me, I think it was G7, asked me if I would analyze AZO. And I usually don't like to talk about the stocks that we have as
Absolutely.
a position.
Yeah.
I had no choice because that's what we had. And I said that we are short and that it had pulled back right to the 368s and then bounced. But everything about the monthly and the weekly chart said that it should be going lower and that it's probably making what I call a hat-trick top, which means a top of time and price. Now, I'll be completely wrong. For the next 2 months, it takes out 399.10.
Right.
But until then, I think that we've made a hat-trick top in the auto parts, and that's really interesting because this is part of United States economy, the auto sector and the auto parts. And people have been buying the auto parts because they've been keeping their cars longer and longer.
That's right.
So how do you piece this together? If Ford and General Motors were climbing and really pushing much higher, I'd say, hey, great. The recession part of it is over.
That's right. Absolutely.
Now we're going to new cars instead of the old cars. But they're not acting all that well.
Yes.
I don't know what do you think of that? What do you think of the auto sector itself?
No. Look, I agree with you. The auto parts stores have had a great run ever since the March 2009 area. And, you can see that by taking a look at the chart. It makes sense. I don't know about you, but, I've certainly keeping my cars longer and just keeping them maintained.
I always do.
Yeah, it makes a lot of sense. You hop in my car, it looks like new, but Basil, it has over 300,000 miles on it. You got to love that.
Really?
Absolutely. And
I'm going to guess that it's either a Volvo or a Mercedes.
It's a Mercedes.
Yeah.
And people hop in it and they think it's brand new, and I say, well, let me show you the odometer here. So, if you maintain, it's like anything in life. You maintain it lasts a lot longer. But as you say, it would make sense that if you're starting to see a sell-off in the auto parts because people are starting to buy new, you would expect to see Ford, moving up towards highs. We know that is not happening out there.
And here's another thing. I've spoken about the discretionary income. I said something's wrong with this picture. If folks are going out and spending so much money at these restaurants, Panera, Chipotle, the Buffalo Wild Wings, and that was the sector that was on a tear up until, same with the auto parts, up until fairly recently.
Yes.
Well, what it's, in my experience, looking at markets for 30, 40 years, I don't understand. I've never seen this before, where discretionary money in a so-called worst economy since the Great Depression.
Yes.
If anybody's read or even had their grandparents talk to them about the Great Depression, you'll know that we've seen nothing even remotely like it.
No,
since
absolutely.
the 1930s.
Yeah, no, absolutely not. No, absolutely not.
When the politicians use this every single 4 years, I tear my hair out. I say, what are they talking about?
Talking points.
Nothing.
Talking points, Basil. That's all it is. Hey, we're about to go to a break here. Folks, you got the Dow powering up this morning, up 86 points. S&P's up 11. Composite up 22. Give us a call. Now you got Basil, Chapman, and Steve Rhodes together, 877-927-6648. We get back. We're going to go to Mike in Palm Harbor. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Steve Rhodes here, and today I've got my guest host is Basil Chapman. Right now you got the Dow up 84 points, S&P's up 10, Composite up 21. And if we take a look at some volume here, just take a look at the ETF structures that are out there. You've got the diamonds trading out right now at 125.96. Volume in it so far, 841,000 during the first hour of trading. That is going into 7.7 million. It's going to need some energy moving along here. If you take a look at the Q's up trading out at 63.04, 8.5 million shares. That is going into 42 million shares. That's about on par from a volume standpoint. You've got the SPYs, 28 million going into 205 million. So that's going to be light on volume, at least at the moment. SPYs trading out at 133.01. To round things off, you got the small caps, 9 million shares trading at 76.94. Moving into 62 million. Let's go to Mike in Palm Harbor. Mike, thanks for calling. Thanks for holding.
Yes, I'd like to have Basil take a look at BAC chart. And I would just, you mentioned the auto parts stores, and I just think we should all be a little cautious of that because the rates are so low right now for on financing automobiles. And I've got relatives in that business, and it's just booming right now, and the new cars have got such deals on leases and everything else, and people are really trading in those old cars in the last few months.
Yeah. Well, you can. Are they your relatives? Are they a dealership on the dealership side? Which
in Miami, and the Alley and all the different financial companies are really loosening up, which is really funny, Steve, because you can't buy a $200,000 house with great credit, that's now selling for $50,000, but they'll sell you $50,000 Cadillac, and
it's a lot. I think it's a lot easier to repo a car than it is a house these days. I think that's always been the theory behind it, So, but if and sometimes it's really a matter of reading the stock charts, not necessarily what you really see going on in the industry. I mean, you got Ford today trading out at $10.04, so you got a little bounce in the market going, maybe some short covering, but certainly if you take a look at the Ford stock chart, it's at its lows. It's back all the way to the November 25th area, when the market really last took off out there. But let's go take a look at BAC for you. And tell us, are you long, short? Tell us what you're trying to do here.
I'd like to get in on, and just one more thing about the car thing. You were joking about the repo thing, but that's what they attribute the companies to loosening up about, because they can go get that asset, and they're not going to wait 2 years like with a house.
Oh, I wasn't joking. No, I mean that's the reason why you would see credit loosening up, and depending on your even if you have a poor credit score, you can see them loaning money on a vehicle because they're not that difficult to track down.
Absolutely, and now on a lot of the newer ones, they're GM dealers, and it's OnStar. So
exactly, that's right. So you're automatically being followed. If not by your phones these days, right? You can't escape.
That's a whole other conversation about OnStar, but that's one for the conspiracy.
Absolutely. All right, Basil. So, Basil, why don't you take this away? So we've got Mike in Palm Harbor looking to get in on BAC. And do you have that stock chart on your screen by any chance?
I certainly
Perfect.
do.
Okay, take her away, partner. Take her away. Got a minute and a half.
Thank you. I'm going to ask your opinion as well about something in the BAC chart, but let me just tell Mike, first of all, the way BAC is acting right now, it's only up 7 or 8 cents. If you look at the XLF, I need to do that as well. The XLF, the difference is that the XLF went above the 200-period moving average, couldn't hold it, pulled back, and that's the S&P Select Financial Spider Fund. The MACD is still holding well, but the stochastic is really poor. So when I put it together with BAC, which had been acting really well before, also went just above the 200-period exponential moving average and then pulled back, I was looking at this real closely because my bias right now is to continue to look at sector rotation, and I was saying to myself, wow, if Bank of America never broke and closed underneath its 9-period exponential moving average and held instead at the low of around about $7.70 instead of going to yesterday's low of $7.48, I would have said, well, not my favorite chart pattern, but a cup and handle pattern could be forming. Instead of pull back a little too deeply. So, we've got a break coming up. I tell you what I'll do. I'll just do a little more work on this, and then I'll sum it up for you if you don't mind holding on. And as we come back, I will just give you my assessment.
Perfect. Folks, we got the Dow up 92, S&P's up 11. I got Basil, Chapman, Steve Rhodes. We're on the phone with Mike from Palm Harbor looking at BAC. Then we're going to go to Dave in Boston and take a look at the VIX. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these most trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. Has the current market volatility continued to some temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. I'm Steve Rhodes, and I've got a guest host today with me, Basil Chapman. And you can give us a call, 877-927-6648. You get a 2 for today. You get 2 for 1. And you got the Dow trading up 87 points, S&P's up 10. Leading things to the downside, you got Chipotle down $19. That's down 4.5%. Right behind them, O'Reilly Automotive down $16 and change, off 17%. AutoZone down $14. Panera Bread off $4.50. Tractor Supply down a couple of bucks. Popping to the upside, you got Laurel Space. They're up $7. That's up 13%. Google up $6. Stratasys Inc., SSYS, up $3 and change, and Apple right behind them, up $3.28. Let's go back to Mike in Palm Harbor, and we're taking a look at BAC. Basil, go ahead and finish this off here as far as your take on BAC and what you think.
Yes, first of all, the monthly chart is still very poor on Bank of America. The weekly chart is kind of improving, so this is what I'm going to suggest. I think it's a very low-risk trade to start a small, when I say small position, Steve's got a fantastic methodology of using 1% of your portfolio. I'm saying this is not even 1%. This is just a nibble to get started to see, because if Bank of America is going to hold this rally, this little mini tiny rally that it's got now, it has to clear, it's at $7.69, it has to clear about $7.76 to $8 within the next day and a half without taking out the low of today.
And you want it to get above the 9-period EMA, is that right?
I want it to hold. I want to see that it's holding and treating it as a platform.
Absolutely.
Because the MACD is still good and the stochastic is still very weak. So the way I'm doing it is I'm saying start a small position. If you do not get stopped out within 2 days by taking out today's low of $7.61, but instead it's moved higher, I would only add to the position another small position if it goes over $7.85. If it does that, you can add a small position. That one has to have a tighter stop. Your core position, you can make a break-even trade. Why? Because there's a U pattern that is potentially forming here. You'll know by the end of the day if it sustains this rally. If it starts to weaken, you can get out. So it's a very low-risk trade because you've got yourself something like 11 or 12 cents risk. And you've got yourself potential for a move all the way up to $8.06, where the 200-period moving average is strong resistance. And you can go step by step that way. And you have to treat it as a step-by-step move because it's had a very strong decline.
Absolutely. And in my take, just a little additional information, Mike, on that. When I take a look at the daily chart, one of the things that I like about BAC, I like the high volume high that this has. On March 19th, you did 667 million shares as it got up to $10.10. That high has not been tested. So you've got a nice high volume high. You haven't had any volume off of the high there. Potentially, you're making A to B equals C to up. When you take a look at the retracement that this did, it did an ABC down. And the retracement that I'm using here is just simply coming off of the lows from December 19th all the way up to that high that we talked about. Made a great 0.618 retracement. And that area was tested twice. That was in the $6.90 range. Now, what Basil was giving you was absolutely fantastic information about being able to, scale into the trade. Now, Mike, I do have what's called a position size calculator, and you can get that, folks, by simply going to the homepage of TFNN.com, and over on the left-hand side, there's a little area. You'll see an up arrow and a down arrow. If you hit the down arrow, you'll see a little button that says the power of position sizing. You click on that. You can utilize that tool for 30 days for free. Now, the importance of that tool, and I'll show this to you, Mike. Are you watching us on Tiger TV? Oh, we might have lost Mike. Mike, you out there? Well, hopefully Mike is listening here, or maybe because we got the three-way communication going. So I'm going to go ahead and finish this off. Now, Basil, when I take a look at any stock, and I'm going to get into it, one of the things that I take a look at is what's known as the average daily true range. And I just take the last 10 days, high to lows. I count for gaps, and that's what this tool actually does. You input the ticker symbol. In this case here, BAC, you hit the search button. It'll tell you that you've come up with the right stock chart. Now, at the very bottom of it, what it does is it gives you the last 10 days average true range. And when you take a look at this also accounts for gap ups or gaps down. If you see a little symbol here, it says GD, tells you that the stock gapped down. Now, the actual highest, and that's just nothing more, folks, than the daily noise. And if you take a look at June 15th, the daily noise on BAC was 35 cents. So when I get into a trade, when I decide to take a trade, especially the day that I'm taking that trade, I don't like to be within just the normal daily volatility. So the average daily noise on BAC is 26 cents. Then, in a volatile market, and that's certainly what we're in here, you got a lot of whipsawing going on. I like to use some expansion of that number. In a volatile market, I use a larger expansion, like 1.618. That means I have a wider stop than what Basil was throwing out there. So, use either of those two systems. My methodology is simply to make sure that I don't get the trade right, but I have the stop, in essence, too close. And so in this case here, if you take a look at the target being that high volume area, that high volume would be a price point of about $9.50. I think I used the bottom of that. And if you got in right now, the stock is trading right around $7.71 here. You know, Basil mentioned that I use this 1% rule. If you actually risked 1% here, you would be allocating 1% of your total trading capital. You'd actually be allocating, and the risk that I'm talking about, folks, is really the stop loss. So on a $10,000 capital account, you'd be risking $100. And that 100, what you need to understand that when I take a look at risk, it's how much of a percentage of your working capital. If you risked 1% in BAC, you'd actually be allocating 18% of your portfolio to one stock. I don't recommend that you ever do that. So I recommend that, in fact, you shouldn't have more than, you should have maybe 10, 11% total in any one stock ever inside your portfolio there. So in this case here, you don't even need to use a 1% risk. You would use, on my system, you would use a 0.5% risk. That would give you 9%. But if you're going to scale in and take Basil's advice here, and I think it's absolutely great advice to, you know, let the stock prove it to you and then add to it, you're going to be using, you know, probably more like 0.25% and then adding to it. So you can use this tool here. You can use it for Basil's system, my system, Tom's system, and anybody. It allows you to actually put in the exact stop or dollar amount of stop that you want to use out here. And so I'm with you, Basil, and I would say that in this case here, I would take a look at adding to this trade once it got up and above. As another point to add to the trade, once it got over the June 7th area with volume, that has 276 million shares, and the high there is $7.90. So that's another spot that I would look to be adding to a BAC trade. So that's on BAC. Let's go to Dave in Boston. Dave, thanks for holding. Thanks for calling. Do we have Dave out there?
Hello.
Dave, how you doing?
Hey, Steve, how are you doing today?
I'm doing great. Good to hear your voice as always.
Absolutely. Hey, Basil, how you doing today? I'm up here in Boston. What a beautiful day.
Beautiful day. I'll only be able to see it later on when I play tennis this afternoon.
Oh, good.
I'm looking forward to a little Wimbledon action this weekend. I'm hoping Nadal can win it this year.
We'll see. It's going to be very interesting. I actually almost played on grass about 2 weeks ago in Newport. I decided at the last minute to go to the clay because that's what I play on normally, either clay or hard court. But
if you're going to play on Basil on grass, would you need different shoes just simply because of the potentially being a little bit more slippery? Or
you know, I remember back in South Africa, my son reminded me that we had played on grass back in South Africa on one of my visits after I'd left South Africa. I don't know. I was going to ask the guy because I didn't want to go sliding on the grass.
We don't want you hurting yourself, so make sure you know, maybe you're supposed to have spikes like football players or something.
But let me tell you, when you get to Wimbledon, you really do know which shoes to wear.
That's for sure. Yeah, that's for sure. That's absolutely for sure. Now, Dave, you wanted to take a look at the VIX, you know, and as you know, the VIX is Basil's baby.
I hear him every day. He VIXy, TLT, Bondi, and
that's right.
And the dollar.
That's right.
It's so good because, you know, we get a different flavor each hour between Steve, Tom, Basil, Larry, and I'll tell you, each one has a strength, and it's fantastic. But today, with the market up, take a look at the divergence. We have the VIX up, we have TLT up, the dollar up, and the market's up.
Yeah.
Now, if that's not a red flag, I don't know what is.
So your question really is, what's the relationship right now between the VIX under 20, but at 19.81 and up 9 cents, and the Dow up 80 and the S&P up 9?
Correct. I'm in Steve's camp. I'm thinking maybe one more big swoosh down or sell off before we go into holiday mode and grind up maybe into next week with window dressing and 4th of July. But what I'm seeing here is possible maybe a sell off either today or tomorrow. I just want to get your take on that.
Okay, well, if Steve doesn't mind, I'll just jump in.
We want you to. You're the VIX. You're the godfather of VIX, Basil.
Thank you. I don't know if that's a compliment.
It is. No, it absolutely is. When it comes to Vixie, you're the man.
Yeah, Vixie, Bondi, and Dolly are my three
There
pairs.
we go.
That's right.
Okay. Now, this is what I'm looking at, and it's worked so far, and it's a number that I took out of the air. I mean, I spent a lot of time thinking about it. I've got no mathematical formula for it. It seems to have worked, and as long as things work, I stay with that. And my contention has been that the buying pressure, as long as the VIX is in the 20s, above 20, is going to put a cap on the market, not just the Dow, but the general market. And if you see the VIX starting to go back to the 18s, it'll be buying pressure, and you'll see the market go higher. As it stands right now, it's kind of cusping. It's right there at 19.77. I'll make it real easy. On a one-day basis, you certainly can see a divergence, but the very next day, if this market goes higher tomorrow, the volatility index will slide. I'm absolutely sure of that, and it'll probably get down to the 1830 area or even lower if the Dow is up 100 or so points tomorrow. If the Dow, in fact, is in this stalling, this trading range formation, we will watch to see on Friday at 4 o'clock, because if Friday at 4 o'clock, now if you're looking at my charts, if you're looking at Tiger One, you'll see my charts, you'll see that the action in the volatility index 3 weeks ago said, wow, the VIX is holding above the 200-period exponential moving average. It's making legs see. This is the longest move that it's had in a long time, going above that 200-period moving average, and whenever it's done it before, it's accelerated. Then all of a sudden you got that tremendous down move. You got that June 1st, I think it was, rally in the market, and the VIX dropped. So at this particular point, the VIX is it's a challenge. It's the fight of the two chart patterns, either the cup formation or the arch formation. And here again, it's just real easy. On Friday at 4 o'clock, the VIX is above 20. We've got to be much more cautious on the market. If the VIX is in the 18s, it says we could, in fact, continue to rally the following week if the volatility index holds lower. I'm just making it as simple as that. I treat 20 as the kind of benchmark. There might be a little leeway, but hugging the 20 line is also negative. It needs to slide back into the 18s to see the volatility, to see the buying. I only treat it as buying pressure, selling pressure. So that's the way I have it. I'm trying to make it simple. I could be wrong at any point. So far, it's worked quite well.
Well, I like it, Basil. Sounds like above 20 go short and below 18 go long.
Wait till Friday.
Yeah, wait till Friday.
For the weekly, and also in the meantime, it's kind of doing what it's supposed to do. But Friday is the weekly chart, and that's going to be pretty critical, because if it goes above, if it goes into the 21, 22 area, that's just suggesting that there's going to be weakness the following week.
Right.
And that actually, Dave, and what happens is that actually starts to line up with next week's lunar schedule, if you will. And so we've got a full moon coming in. The moons have been working out well at identifying highs and lows, and the full moon has worked the best in the bear market when the market has pulled down into it. So, continued, rally today. You got the DAX that is up 76 points. So Europe is up across the board here right now, and up a percentage plus. So you'd think that today the markets here would stay up, maybe move a little bit higher. Maybe, you have this a little bit of where you've got the dollar up, you've got the VIX up, and then maybe what we do see is you get a close in the in the 20 range or what have you inside the VIX, and then next week you've got that nice one big pullback. Maybe it's a day or two into the full moon, which is on July 3rd. And, folks, that is when, now the interesting thing here, if you take a look at the holiday schedule, the last time that the market gave you a great buying opportunity happened to be the Friday after Thanksgiving, when basically nobody was around, And so could the same pattern be unfolding here, where it comes into our partial day coming in on Tuesday? So just to throw that out there.
Yeah, that's right. That was the low, Friday.
Yeah, Friday. November 25th, and most of us, I don't know about you, but I was I wasn't sitting around a computer. Hey, Dave, always great to hear from you. Our folks love your voice out there, so they want you also to be a co-host.
Thank you, Dave.
You bet.
Have a great week, guys. Take care.
You bet. Stay tuned, folks.
Bye-bye.
Basil and I will be back for the last segment. Then Basil is flying solo after that. Then Larry Pesavento. It is Wonderful Wednesday. Hopefully you're off to a great start of your day. Dow's up 82. S&P's up 9. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Master Masters Show, folks. I'm your host, Steve Rhodes, and sitting in with me today is Basil Chapman. Now, Basil's going to be doing his show from 11 to 12, flying solo. Then we go out to Tucson, Arizona, to Larry Pesavento from 12 to 1, 3 to 4 back here for the David White Band. Then we go back out to the West Coast from 4 to 5 today. Ken Shreve filling in for Tom O'Brien. Then I'll be back with you from the for the 5 to 6 o'clock show. Right now, you got the Dow trading up 77 points. S&P's up 9. And Basil is the foremost expert here at TFNN on the Dow, and has studied it. Now, I have done a special report for you folks. It's available on the homepage of TFNN. You'll see it as a special report. This goes back and takes a look at the Dow going back to 1928. Analyzes the Dow on a monthly basis to allow people to provide a tool. Basil is a big user of moving averages in his work, and so I've applied just a little bit of a twist to the moving averages out there on the Dow charts. And what it does, folks, it helps you to understand how to manage your big money, when to be in, when to be out of the marketplace, and that's so helpful to at least 70+% of our listeners out there, Basil, who just simply have choices in their mutual funds, with their employer, and they're working so hard that what people tend to fail to do is spend any time managing that money. So go over to the homepage of TFNN.com, folks. Get that free report. If we take a look at the Dow right now, the 9-period exponential moving average is about 12,604. You're trading at 12,608. The 200's at 12,592. Again, you're trading at 12,607. My call is that we'll see the Dow here move up. I don't know how, but I expect we're going to see the Dow move up into the March 4th low. That is going to be 13,022. It also is a 78% retracement off of the highs going back to May 1st into the lows that were put in on June 4th. But Basil, give me your take on the Dow, if you would.
Well, if you don't mind, I'm going to do something a little differently.
Yes.
I've got a chart up here. I didn't have a chance to actually block out what it is. If anyone's looking at Tiger TV, and Al, our wonderful engineer, probably switched me right over to the chart that I'm showing.
Okay.
I'm showing a particular chart, and the question I've shown it over the years that I've been here.
Yeah.
A question I always have is, I say, would you have bought this chart, it doesn't matter what it is, would you have bought it here, or here, and here, or here, and here?
Yeah.
And there's the chart. Let me do that again. Somewhere maybe over here, or here, and here, and then I turn around and say, you know what this is? Because it's blocked out. You can see what it is right now. Yes. It is the chart from the low of 40.60, July of 1932.
Perfect.
And if I'm going to do this, I haven't had time. I'm planning on doing it in the next couple of months. I'm going to start putting all the headlines of the New York Times.
Yes.
How the Dust Belt and the horrendous stuff that was going on during the Depression. But if you bought the Dow, in the worst news, even at the bank crisis, there was a 17% gap that day. If you had bought the Dow, you would have just said, I'm not listening to the news. And this is the beautiful thing about TFNN, that you get information, that we've got these 7 webinars that are coming up from each one of us. These webinars are going to teach you how to not listen to the news, but to look at the charts, how you can, this is 1932, it went from 40.60 to 195 in 1937.
Absolutely.
5 years later, and if you had listened to the news, you would have been frozen. You would have done nothing. You probably would have got in right there in July.
And Basil,
just
to follow up on that, I've got my part of my Dow stock using that tool that is included in the special report. It had you out in October of 29, and it had you getting back into the Dow April of 1933, folks.
Education.
And it kept you in there all the way until August 1937, folks. Thanks for being here, Basil. Have a great show. Thanks so much for joining me. Really a pleasure to spend time with you. Have a great day, folks. Stay tuned for Basil's show, then up to Larry Pesavento, and I'll be back from 5 to 6. Have a great day. Bye-bye.
Thank you.